Hey everyone. Seems like there's quite a buzz around healthcare stocks for 2025.
Yeah, definitely a hot sector right now.
So we're diving into some research from buystocks.ai, their picks for long-term growth, driven by all this new tech, aging populations, just the constant demand for better treatment. First up, Eli Lilly, a giant in the industry. Uh,
Huge, yeah.
$767 billion market cap. Kind of hard to wrap your head around a number that big, right?
It is. It is. But their success is pretty easy to understand, especially when you look at their diabetes and obesity treatments.
Yeah, Muncharo, Zepbound, those are all over the place, right?
Exactly. They're really addressing a critical need there. I mean, the rates of those conditions are just skyrocketing globally.
For sure. I even see friends talking about these medications, but what makes them so different? There have always been diabetes and weight loss drugs, right?
Right. But the thing about these is how they work. They're what we call GLP-1 receptor agonists.
It's GLP-1s, okay.
And what's interesting is they actually mimic a hormone that our bodies naturally produce. Helps regulate blood sugar and appetite.
So they're working with the body, not just trying to mask the symptoms. Interesting. What else is driving their growth?
Well, their pipeline is really exciting. They're investing heavily in Alzheimer's and cancer treatments. Huge potential there. Those are massive unmet needs in healthcare.
Yeah, absolutely.
Specifically, they've got this Alzheimer's drug, donanemab. It targets this specific protein that builds up in the brain.
Okay.
And the idea is that it could actually slow down the disease progression, which would be huge.
Right, because right now treatment options are pretty limited for Alzheimer's. I mean, some analysts are even predicting a price target exceeding $1,050 per share. But with all this potential, I'm guessing there's still some risks to consider.
One thing with Eli Lilly is they are quite dependent on the success of those GLP-1 therapies.
Right, they're doing really well right now, but
But the market is getting more competitive all the time, right? New treatments are emerging.
so they have to stay ahead of the curve. So overall, though, it sounds like for long-term growth, Eli Lilly is a company worth keeping an eye on.
I'd say so. They have the size, the resources, the ambition. They're definitely a major player.
All right, let's shift gears and talk about another company that caught my attention. Intuitive Surgical. What really jumped out at me was their recurring revenue stream. It's like 86%.
Yeah, that's incredibly high.
What's the secret sauce there?
It's all about their business model. They're the folks behind the Da Vinci surgical system.
Oh, yeah, I heard of that.
It's a robotic-assisted surgery platform,
Okay.
and they basically dominate the market for that. Over 16 million surgical procedures globally using their system.
Wow, that's a lot of surgeries.
It is, but the recurring revenue comes from the fact that it's not just selling the system itself, it's the instruments, the accessories, the service contracts, all of that for each and every procedure.
Oh, so it's kind of like the razor and blade model.
Exactly. Sell the razor, then keep selling the blades. And in this case, the blades are essential, high-precision surgical tools.
Makes sense, especially in surgery where precision and reliability are everything.
Absolutely. So that model creates this steady, predictable stream of revenue for them.
So help me understand this Da Vinci system a bit better. Is it like the surgeon is sitting there playing a video game?
Not quite a video game, but I get the analogy. They're sitting at a console. They have this high-definition 3D view of the surgical field, magnified, incredibly detailed,
Right.
and they control these robotic arms with tiny instruments attached.
Wow.
So they're making these incredibly precise movements inside the patient's body, all from this console.
That sounds pretty futuristic.
It is, and the benefits are huge. Less trauma to the tissues, smaller incisions, less blood loss. Patients recover faster.
But I'm guessing there's still some risks with investing in a company like this.
There are, for sure. One thing is their valuation. They're a very successful company, so their stock price is already high, which could limit future growth.
Okay, so that's something to consider.
And then another thing, they're quite reliant on elective surgeries.
Those are.
Surgeries that aren't emergencies, things like knee replacements, hip replacements, things that can be scheduled.
Nice.
And while the demand for those is generally pretty steady, it can be affected by things like economic downturns.
Right. If people are worried about money, they might put off those surgeries.
Exactly. Or even unexpected events like we saw with the pandemic, those can cause postponements and cancellations.
Yeah, that makes sense. So it's not a foolproof investment, but it sounds like for people who are comfortable with some risk and who believe in the long-term potential of robotic surgery, Intuitive Surgical is worth looking into. Okay, now for something completely different, let's talk about Vertex Pharmaceuticals. They're really focused on cystic fibrosis treatments. But what's intriguing to me is their work with gene editing.
Yeah, they've established themselves as leaders in CF, but with this new therapy, Casgevy, they're really pushing the boundaries.
So break it down for me. What is gene editing and why is it such a big deal?
Okay, so basically, it's a set of technologies that allows scientists to alter the genetic makeup of cells.
Wow, like actually changing someone's DNA.
In a very targeted way, yeah. And with Casgevy, what they're doing is correcting the specific gene mutations that cause cystic fibrosis.
And they're partnering with CRISPR Therapeutics on this.
Right, CRISPR is a huge name in gene editing. They bring a lot of expertise to the table.
So that partnership gives Vertex an edge in this rapidly evolving field.
For sure, but it's not just about cystic fibrosis for them. Their pipeline is full of potential treatments for all sorts of things: diabetes, kidney disease, sickle cell disease, even acute pain.
Wow, they're ambitious.
They are, and those are all areas with huge unmet medical needs, so the potential impact is massive.
Definitely. But we have to acknowledge the risks, right? It's biotech. Things can go wrong.
Of course. A big one is that their pipeline, while exciting, is still largely in development. Bringing new drugs to market is a long, expensive, and uncertain process.
Right. There's no guarantee of success.
And the regulatory hurdles are significant. Plus, competition is fierce. Other companies are also pursuing gene editing therapies.
So it's a high risk, high reward kind of situation.
In many ways, yeah. For investors who are comfortable with that level of risk and who believe in the potential of gene editing, Vertex is definitely one to watch.
All right, let's move away from the cutting edge of biotech for a moment and talk about a company that's probably a bit more familiar to most people, UnitedHealth Group.
The insurance giant.
Exactly. Now, when I think of UnitedHealth Group, I think of stability, dividends, that kind of thing. But how do they fit into this picture of all these innovative, high-growth healthcare companies?
Well, they are the largest health insurer in the U.S., so you're right about the stability aspect, but they're also a major player in pharmacy benefit management.
Pharmacy benefit management, that's a bit of a mouthful. What does that even mean?
So PBMs, they're basically the middlemen between drug companies, insurers, and patients.
Yeah.
They manage the prescription drug benefits for health plans. They negotiate prices with drug companies, create lists of covered drugs, process and pay for prescriptions, all that.
Sounds pretty complicated.
It is, but it's become a crucial part of the healthcare system, especially as drug costs keep rising.
But also a controversial one, right?
Yeah.
I've heard criticism about PBMs and their lack of transparency.
Oh, yeah, there's a lot of scrutiny on them, accusations that they contribute to high drug prices, that kind of thing.
It sounds like they have to walk a tightrope.
But it's not just PBMs, they're also expanding their integrated healthcare services.
Like what?
Things like Medicare Advantage plans, those are popular with seniors,
Okay.
and home healthcare services, which are becoming increasingly in demand as the population ages.
But even with their size and all these different business lines, I imagine there are still risks with investing in UnitedHealth Group.
Of course, the healthcare industry is full of uncertainty. A big one for them is the constantly changing regulatory landscape. Healthcare reforms, especially those related to Medicare and Medicaid, those can really impact their bottom line.
Right, that makes sense.
And then there's competition, always pressure from other insurers. Plus, like we said, increasing scrutiny of PBM practices could lead to more regulation.
But for investors who are looking for stability and dividends, UnitedHealth Group still seems like a pretty solid bet.
I'd agree. They have the track record, the diversification, the sheer scale to weather the storms that are bound to come in healthcare.
All right, let's wrap up this part of our deep dive with our final company, Abbott Laboratories. What makes them stand out from the crowd?
What's interesting about them is their incredibly diverse portfolio. They're not just focused on one specific area of healthcare.
Okay, like what?
They're in diagnostics, medical devices, even nutrition. It's a bit unusual in an industry where specialization is so common.
So they're like a healthcare conglomerate, a bit of everything.
Kind of, yeah. And that can be a good thing for investors. Diversification helps mitigate risk.
Makes sense. If one part of their business isn't doing well, the others can pick up the slack.
Exactly. It gives them some resilience in a sector that can be very unpredictable.
So what are some of their key products or services across these different areas? What are they known for?
Well, in diagnostics, they're a leader in point-of-care testing.
Which means?
Tests that can be done quickly and easily right at the patient's bedside or in the doctor's office. No need to send samples to a lab and wait for results.
Okay, I see.
Their continuous glucose monitoring system, Freestyle Libre, that's been a huge success.
Oh yeah, I've seen ads for that.
It allows people with diabetes to track their blood sugar constantly without having to prick their finger all the time.
That must be a big improvement in quality of life.
Oh, absolutely. And then in medical devices, they have a strong presence in the cardiovascular space.
Hard stuff.
Exactly. Things like stents, heart valves. They're also big in neuromodulation, using implantable devices to treat chronic pain and neurological conditions.
Wow, so they're really addressing some major health concerns.
They are. And then there's their nutrition segment, which might seem a bit out of
Right,
place.
so different from the rest.
But it's a big part of their business. They make infant formula, adult nutritional supplements, specialized medical foods, all sorts of things.
So it's a steady revenue stream for them, and the demand for those products is always going to be there.
Exactly. Plus, it's a global market, constantly growing.
So they've got this diverse portfolio, but what's driving their growth specifically? What trends are working in their favor?
A big factor is their focus on new product launches, particularly in areas like cardiovascular and diabetes care.
But even with all that going for them, there must be some challenges they face, right?
Right. One challenge is the intense competition in the diagnostics market. Lots of companies vying for market share there, so they have to stay ahead of the curve. And then global economic conditions can also impact them. They have a big international presence, so economic downturns in other countries can hurt them.
So it's a mixed bag, opportunities and challenges, but overall, it sounds like for long-term investors looking for steady growth and some income, Abbott Laboratories is a solid option.
I think so. They have a good track record. It's a diversified portfolio, and they're committed to innovation, so that bodes well for the future.
But now let's zoom out a bit and look at the bigger picture, the trends that are driving growth across the entire sector. So let's dive in. What are some of the major forces that are shaping healthcare innovation and investment in 2025 and beyond?
Well, one trend that's impossible to ignore is the rising demand for weight loss drugs.
We talked about that a bit with Eli Lilly and their GLP-1 medications. Okay, let's move on to another trend that's transforming healthcare, the use of robotics and artificial intelligence in surgery.
We touched on this with Intuitive Surgical and their Da Vinci system.
Right, but like you said, it's much bigger than just one company.
This is a trend that's sweeping across surgery in general.
Okay, so robots in the operating room.
But it's the level of precision and control that robotics and AI bring to the table that's really game-changing.
Biotechnology, specifically gene editing.
We talked about this with Vertex Pharmaceuticals.
Right, their work with CRISPR therapeutics on cystic fibrosis treatments.
And it has the potential to completely transform how we treat and even prevent diseases.
Okay, let's move on to a trend that we've touched on throughout our conversation, but it deserves its own spotlight, the aging global population.
This is a fundamental driver of growth in healthcare, no doubt about it.
So we know the world's population is aging, but how does that translate into opportunities for healthcare companies?
Simple. As people get older, they need more healthcare services.
Right, that makes sense. What are the key things to look for when evaluating a healthcare stock?
First and foremost, look at their financials.
The numbers, right?
Yeah, go beyond the hype, look at their revenue growth, their profitability, their debt levels.
So a company might have amazing technology, but if they're drowning in debt, that's a warning sign.
Exactly. Innovation is great, but financial stability is crucial.
Makes sense. What else should we be paying attention to?
Their research and development pipeline, what are they working on? Is it truly innovative? Does it address a real need in the market?
Are there any specific red flags or metrics we should be looking for when we're examining a company's pipeline?
Pay attention to the stage of development their products are in. Are they still on preclinical trials? Or have they moved to human testing?
Okay.
How many trials are ongoing? What have the results been so far? And also look at their partnerships. Are they collaborating with reputable institutions or companies?
But even with those looking good, there are always external factors to consider, right?
Oh, absolutely. Healthcare is heavily regulated. Changes in FDA approvals, healthcare reforms, political shifts, all of those things can have a huge impact. Keep an eye on the news, understand the political context. It all plays a role.
Any other words of wisdom for those of us who are ready to start exploring healthcare investments?
Don't put all your eggs in one basket. Diversify, spread your risk across different healthcare subsectors.
Okay, so not just pharmaceuticals, but also biotech, medical devices, healthcare services, that kind of thing.
Exactly. That way you're capturing growth opportunities across the entire spectrum of healthcare.
Well, this has been a fascinating deep dive into healthcare stocks for 2025. Thanks again for listening, everyone.